Well, good morning again, and welcome to the weekly Messer webinar for life insurance, allowing us the opportunity to share with you our carriers, their sweet spots, allowing you as agents to have additional confidence as you go out and speak to your clients about the products and the services you have to render. Just a couple of housekeeping items before we get started today. Please make sure to mute your phones. The system does have an automatic mute, but occasionally something will slip in. Also, we're going to ask you to please type any questions you have during the presentation into that question box in your right-hand column. In addition, we ask again to stay with us until the very end, where we'll review our information as well as provide you with an additional bonus. The bonus that we always provide is based on your registration, which if you're on the phone today or on this connection, you definitely have taken the first step, and by being here, the second step, so that you qualify, because the bonus is only open to those who have attended the actual presentation. With that in mind, my opportunity this morning to introduce to you the Regional Internal Wholesaler for Protective Life, Mr. Stephen Gowowski. Good morning, Stephen.
Good morning, Mark. Thank you. Thank you for that. Good morning, everybody. And what I'd like to do today, I have a few slides here. I'm really going to talk a bit about Protective Life, talk about some of our sweet spots, a few of our products, some of the advantages of these products, and kind of throw in some sales ideas in between. So Protective Life, we're an insurance company that's been around for over 100 years. We were purchased by one of the largest international insurers, Daiichi, a few years back. Financially stable, we were AA rated. We're a carrier that's acquired a lot of smaller carriers throughout time. One thing that we really pride ourselves on is throughout all these acquisitions, we've actually never increased expenses on these older contracts. Excuse me. And really, I think one of our big niches is we're a low-cost provider. I kind of refer to us as the vanguard of the insurance industry. We have pretty low internal costs. So with that said, I'm going to go into our first slide I have here. And the product's called our Protective Custom Choice UL. And basically what this is our term product now. It used to have longer term guarantees, but now it's just our term product only. And a lot of people say, well, why is it called the Custom Choice UL? It confuses people a lot of times. And basically we have it on a UL chassis so that we can, big thing here is that we can actually have payments past 31 days. So a normal term policy, if someone's past 31 days, they haven't made a premium payment, the policy will lapse. Ours will allow them to pay up until 60 days to still keep their coverage in force. So this first one right here we're looking at, the Protective Custom Choice short duration. The whole point of this slide here is we're looking at for a 45-year-old male, but the flexibility we have with this product, and you're going to see this in some other slides, but we can dial this term anywhere up until 30 years. So like this particular situation here, we call it our 5x5 sales idea. All it is we have a $500,000 death benefit. We don't offer a 5-year term. 10 years are minimum. With this product, they're getting a 10-year term, but if you notice, the first 5 years, the annual premium is $350.96. And for years 6 through 10, it jumps up to $525.53. As opposed to being a level term for 10 years, what we do with this one is, we'll let people say, hey, I want a 5-year term, but you guys don't have 5-year terms. So we say, okay, we'll put you in this 10-year term. What we're going to do is we're going to pay a lower premium for the first 5 years. Upon that 6th year, the premium jumps up, but if they don't need it, they just let the policy lapse. So again, this is called our 5x5 sales idea, and it's something that we do use from time to time for somebody who wants a shorter term period. The next slide. This is 5 facts we have that really kind of stand out with our term insurance. The first one here, clients can spend less and buy exactly what they need. I was kind of alluding to this earlier. Like a lot of carriers have 10, 15, 20, 25, 30-year term. That's it. With ours, you can customize this term. So again, somebody here wants 17 years of coverage. Well, we can set them for 17 years. We can dial it for a 17-year period. Number 2 down here, the second one is no sticker shock here. The annual premium remains level after the death benefit period ends. Again, kind of a unique feature of our term. Somebody buys a 10-year term, and at the end of 10 years, the premium stays the same. We now have a decreasing death benefit, and that's all possible because we're on a UL chassis again. So they keep paying the same premium they paid for the first 10 years. Now they have a decreasing death benefit. If they want to keep it, they do. If they don't, that's fine. They can cancel it as well. Third point here, flexible, affordable, evidence-free exchange options are available. And our conversions here is for either the first 20 years or before age 70, whichever is first. And they can convert into any of our products, which we have a GUL, the Advantage Choice UL. We have several VUL products, and we also have an indexed universal life product. Fourth point here, and this is kind of a big one. It may not be a huge difference between all carriers, but it says here there's an opportunity for higher agent compensation, and all this is we don't take out a policy fee for commission. So somebody's paying $500 a year, the agent's going to get paid on $500. A lot of carriers are paying $500, they have a $60 policy fee, commissional premium is $440. Last one we have here, and I kind of talked about this one earlier, but it says clients are less likely to lapse their policy should they need more time to pay. And again, this is a situation where on a 31st day, normally with most term, if they haven't paid, the policy lapses. We're going to give them up to the 60th day to do this. Now to go into a sales idea here, this is comparing our Index Choice UL to the competition, and in particular, we're comparing to a policy that's used quite often. It's John Hancock's. It's a current assumption product called the Protection UL. Now we're showing this. What we do is we take the same premium that we're gonna pay into both policies, which is $13,734. We're running this out. We see a death benefit guaranteed to age 86. And this is on $1 million policy, by the way, for a 55-year-old male preferred. The John Hancock policy, guaranteed to 86. Ours guarantees out to 105. The John Hancock, they're running at the current assumption rate, which I think it's 505, but we're showing it at 5% here. So in 20 years, they have $167,000 cash. Now we take ours, we run it at 0% with no return. Cash value in the year 20, we have higher than they do at $184,000. And again, the big thing with ours is, if you haven't used ours before, taking a look, is we have very low internal expenses. Next slide is just kind of a continuation here. Competitive position with us with this Index Choice and our Advantage Choice is guaranteeing between ages 90 and 105. Now, if you're not familiar with our Index Choice, the key feature of ours is that you can dial the guarantee as long as you want. The guarantee being, again, 0% performance, so they never get any positive years. You can dial it to age 80, 85, 90, 100, 121, whatever you want to dial that to. So again, as long as they make that premium, doesn't matter what the market does, the S&P 500, this policy is guaranteed for as long as you initially set that guarantee for. Again, our niche is between age 90 and 105. And this also is the same with our Advantage Choice UL, which is our GUL, which has some cash in there. Same thing though, the niche is from ages 90 to 105 on the guarantee. So our index crediting, pretty straightforward, annual point-to-point to the S&P 500. My next product, or my next slide here, I'm going to compare our Index Choice UL now to a GUL, which is American General's. So for this one, we have a 45-year-old male, $500,000, preferred non-tobacco. And we're paying $3,631 a year into both policies. Now, American General's, the guarantee is running to 100. Our index, again, guaranteed with no performance, runs out to age 90. So there's a difference there. Now, what you're going to see below this is the huge difference in cash value at ages 65, 75, and 100. So at age 75 for this individual, With American General, they have a little over $21,000 in cash. With ours, we have $172,000 in cash. So again, just showing us a comparison between a GUL and our index choice UL, which our index choice UL a lot of times we kind of refer to it as a GUL/IUL product because of the guarantees you can dial in here. The last slide I have here is now going to compare our index choice UL to John Hancock's index choice UL. And here we're looking at a comparison for a 45-year-old male, again, preferred non-tobacco, $500,000. And we're going to pay the same annual premium in this one. You might not be able to read it. The writing's a little small in this one, but I'll read it all off for you if you can't. We're paying $4,500. We're going to use a 5% rate of return. So again, now this is John Hancock's IUL, the protection IUL, against our IUL. In 20 years, we have $105,000 in cash. They have $72,475. Big thing you're going to see, the next column is the cumulative policy expenses after 20 years. Expenses in our policy are about $71,000. John Hancock's double that at $52,249. Last column here is the benefit guarantee, again at 0%, out to 105. John Hancock's is until age 90. So again, that's our key portfolios, our index choice UL and our advantage choice. Again, we do have some variable products as well, but these are the two products I want to talk about today. And from that, I just want to open up for any questions, concerns, anything that anybody wants to ask. Please let me know.
Stephen, again, thank you very much for taking the time to be with us this morning. One of the first questions that we have, and thank you very much, Baron, for being with us again this morning, is what are conversion options, or are there conversion options available with the custom choice UL?
Yes, they are. That was on one of the earlier slides, actually, and the way it works is it's either 20 years or age 70, whichever is first. So if they're 45 years old and they get a 20-year policy, it's going to be for 20 years. So it's like, again, it's 20 years or age 70, whichever is first. So if they get a 10-year policy and they're 50 years old, they're going to have 20 years on that, or age 70, which would coincide with each other. So it doesn't matter what the term length is, it's 20 years or age 70, and from there they can convert to our whole suite of products.
And as an example, when you mentioned the suite of products today, what products would they then be able to convert to?
Well, we have some of our older products, a Pro Classic, a Current Assumption UL, the variable products, Premier 3, Investor's Choice. On this side, they would have the Advantage Choice UL, which is our GUL that has cash, and then our Indexed Universal Life product, which is the other product I went over today.
Okay.
So GUL and IUL.
Another question that came up is the availability of the marketing material. And what we'll do for the agent that's asking that question is we'll make sure that one of our producer support personnel get that information forwarded to you.
Sure.
Also, the question has come up regarding looking at the illustration. Can we put a finger on what the actual internal cost of that policy is?
The actual overall expenses as a percentage?
Yeah. Yeah.
Yeah. You know, I've heard generally around 1.5%, but that's something I can see if I can get a hold of.
Okay.
Exactly what they are. Let me look into that.
Okay.
And see if I can find some literature on it. Oh. I'm sorry?
Yeah, that's fine. If you can find that, then we can put it back out. Always, too, ladies and gentlemen, the program this morning is being recorded. It will be put back up on the Messer website for you to open and review, especially because I saw a number of people joined us after we really got started and running. and you may have missed the very beginning of what was taking place. Also be aware, of course, if you go to our Messer website, you'll be able to go to the Agent Resources tab, and the drop-down box, one of the first ones will be your contracting tool. That will allow you the opportunity to begin the process of getting appointed with Protective so that you'll be able to bring this portfolio of products to your clients. My question that I would have as well, Stephen, when you're going up and you're quoting the custom choice UL, in order to be able to see this difference in the premium of, as in the example, 325 during years 1 to 5, and then increasing to 525, 6 to 10. How do you go about that? Do you quote a 20-year product? Do you quote a 15-year? How do you get to see that difference?
No, you can, a couple things you can do. Our software is pretty easy to do, and also in WinFlex, but when you get to that, what you're going to do is, one of the solves in here, and I'm trying to think exactly what the solve is. If anybody has any questions, they can call me. But one of the solves basically is, you'll dial this out for, you're going to put how long you want this product to go for, and you're going to put, like this particular situation here, you're going to put 5 years in there. So you're going to put for 5 years, and then what's going to happen is this is automatically going to run, show a lower premium for the first 5, going out for the additional 5, this 10-year like I showed here. But if anybody has any questions on that, they can, you know, they can give you a call, Mark, if they want, or just give me a call direct, whichever way you prefer, and I can walk you through that.
We certainly take advantage of both. So I think what I'm hearing from you, if they go to the basic quoting tool that's offered like iGo Pipeline, they're not going to be able to do this. They're literally going to have to open it up in WinFlex or on the Protective website and use your software to dial in that difference.
Exactly. Yep. iGo and all that's not going to show them. Yeah, they'd have to be into the software.
And that's very important because typically an agent is going to take the simple first step and use the iGo Pipeline quote tool that we have. They're going to quote a 20-year product, and all they're going to see then when they do that is the payment as it would balance out on the 20 years versus the reduced 5-year, 10-year, or more. If you wouldn't mind, Stephen, could you go back to that slide that did show the 5, 10, and then how it dropped again at 15?
I should have it up right now. Can you see it's a short duration protection with premium flexibility?
Let me see here. I got something in my way. Yeah, there it is. Yeah, we can. So I think, again, what we talked about or what you brought to our attention was that low premium in years 1 to 5.
Yep.
An increase again at years 6 to 10. But then what we look at is, again, it reduces at year 11, and it could stay that way for as long as on a 30-year plan or something. Correct?
Yeah. Exactly. So basically, the way to look at this is if you look in year 11, the annual premium is $422.86.
Right.
That's probably what the 10-year premium would have been.
Uh-huh.
But the whole idea here is, like I said, somebody wants short term, you know, maybe up to 5 years. You just need coverage for 5 years. So we say, okay, instead of you having to buy a 10-year term paying $422, we'll get you in for the first 5 years. We'll lower it to $351, and then they stay in it. Yeah, it's going up to $525. But the whole idea with this one really is to get them, someone who wants shorter term, that 5-year term. We can get them in with a lower amount. 6 year, they don't need it, they can cancel. But you're right, if you're looking at years 11 on is, you know, that $422.86, that's generally what they would have been paying for 10-year term. But what this is showing is in year 11, they keep paying that same premium, but now the death benefit's decreasing every year. So, but you had it right on the head. They could keep paying that premium if they said, well, I've already put some money into this, you know, into this product. I can't cash it out. There's no cash, but I still need some coverage for a few years. Even if it's declining, I'm willing to pay for a couple more years or whatever it may be. But that way they still have some coverage in force, albeit declining over time, but they still have something in force.
And as it was brought up earlier by one of the questions from one of the agents, even at the end of that 5 year of that 350, if they chose to, that would be an okay time to go into a conversion.
Exactly.
So again, ladies and gentlemen, I think the key thing here is you don't have a lot of outlets when you want to do a 5 year product. Really come to the plate here and answer that problem for you. Some places you might run into that as a business may take out a loan. They may be required by the bank to get some coverage during that 5 year period of time. And rather than let your client fall into the threshold of what the bank is going to mandate them to do, at least you have an opportunity to shop that benefit for them. Just a question, and it might not be a fair question, but what would you say if we have a clean contract, Stephen, and a clean applicant? What could be our turnaround time expected from submission of application to underwriting decision?
You mean? Well, I'll say for the whole case to be done, be a submission, everything, the total time. Generally, I'd say it's 30 days.
Okay.
Now, it all, as you know, pretty much with any carrier, everything that's going to decide this are APS statements. There is the big time lag, like any other carrier, is how quickly do we get the APSs? Is it some of the doctor's office is working with us and they get them sent over to us quick? That's the big question mark, as always, but I would say in general we have good processing, fair to good processing times. And, if the cases you're working on and you need some help, you always have me internally here as well. You can talk to me and I can see what I can do as well, see if I can talk to some people. So that's always available. But general rule of thumb, I say 30 days. Should be 30 days. Could be 45, like I said, just depends. I hate that, just depends, but you know how that is, Mark.
Sure, absolutely. And that, I just wanted people to understand that that's typical. There's nothing unusual. Stephen, what is the phone number, just in case an agent this morning wants to give you a quick ring on that illustration use of that 5 year, 10 year type of premium?
Yep, let me give it to you. Actually, as we were talking, I figured out what it is. I know what it is, but I just can remember the exact. The solid type is called a customized level benefit period. So if they're in WinFlex, customized level benefit period. Customized level benefit period. And that's what it is in WinFlex. If they do that, then I'm going to take them down where they'll say initial level premium period. They can either put the agent or the year. Generally, you're just going to do the year. You write in year 5, and then it'll show, type in year 5, and it'll show what we're looking at here. But my direct number here is 513-362-1532.
Thank you, Stephen.
Yeah, no problem. Okay. We have a lot of tools. I'm sorry?
No, go ahead.
Well, I was going to say, we have a lot of tools. I'm not sure if anybody on the call has been to My Protective, but these are things I can help you walk through. But this is our site where agents can access, their book of business, and there's a ton of information there. Sales ideas, marketing information, applications, everything's at our myprotective.com website. And I can always walk people through if they haven't been there and show them where this is. And so we have a lot of good information out there, and it's something I can help anybody out with as well.
Thank you. Do they need to be actually appointed prior to being able to look on the website?
They do.
Okay.
At My Protect. The other one I wanted to tell you about real quick is it's called sellwhatmatters.com. So www.sell, S-E-L-L, whatmatters.com. That's another site we have out here where anybody can use this. So an agent can go on there and use this. BGAs can use this, and we have some sales ideas that we have out there where they can be customized. Now, there's only a few that are approved for actual customer usage, but most of these, financial professionals, agents, BGAs, everyone else can look at them from there. But there's also some good information there. Now, that's a site where anybody can look at. You just have to create a user ID and a login, and then just download a company logo, whatever it is, just have it on there. And once you do that, you'll have access to that indefinitely, and that's the site anybody can use. But My Protective, yes, they have to be appointed with us to get access to that.
Yes, thank you. Just wanted to make sure everybody understood that too. Let me just double check again on my question box here and see what we might have had added. Let's see. Question again comes in. Would you have to have paid more into the policy at the end of the policy for only a $10,000 face amount? What would be the minimal, I think would be a better question. What's the minimal face amount available on that product?
Oh, it's $100,000. That's the minimum. That's the initial. Yeah, that's the initial. Exactly, the initial face. Now, what we're looking at here is, up on the screen right now, we're just showing this death benefit just keeps declining, and the $100,000 doesn't factor in here. But for a new policy, it's $100,000.
Okay. Very good. Thank you. And again, someone asked the conversion of the product, and they said at year 40, but again, the guideline is up to 20 years or up to age 70. So
yep.
At year 40, unless you bought this thing at 28, 29, that wouldn't be even possible.
No, remember, it's 20 years or age 70, whichever is first. So like for this one, a 45-year-old, 70 is 25 years, exactly, but we get 20 years. He was at age 65.
So it would be almost impossible to find a situation. Yeah, because 20 years would have passed before 40, so it would not be convertible.
Exactly. No. And Mark, one thing I wanted to add, I didn't mention is our GUL. It's called our Advantage Choice UL. Mm-hmm. That's available for $50,000. So that does have a $50,000 minimum face. So a little bit below the 100 for the term and for the IUL. But the Advantage Choice GUL product is $50,000.
And that competes with a couple of other carriers, ladies and gentlemen, because $50,000 is, for most carriers, the absolute minimal on a guaranteed UL product. So that's very compatible as well. Well, I don't see anything else coming on the box. Again, thank you all for being with us, and acknowledge the fact that should you be able to submit an application in the next 30 days, because you were here on the webinar with us, and allow us that opportunity to get that thing processed within 60 days, which is pretty much normal, aside from any difficulties with APS information, of which case we would give you individual consideration. Messer Financial, again, would be willing to pay an additional bonus of $100 on your commission for that initial sale. Again, only one sale, so hopefully you can go out there and write a husband and wife, but we're only going to pay the bonus on one. And number two, again, you must have been one of the registered and present during this presentation to be eligible for that bonus. Stephen, thank you very much for your time. We wish you well. Hopefully everyone will take advantage of the information that was provided, which I thought was very thought-provoking. Thank you.
Yeah. Thank you, Mark. Thank you, everybody. And like I said, any questions, feel free to call me. I'm here to help you.
All right. Bye for now. Everyone, see you next Wednesday. Next Wednesday, 9 o'clock Eastern Time.